the better you can understand who it is that your investor profile is, your buyer profile is, the more you understand how they think and how they operate, typically the better off you'll be.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, so we are back with the Fully Funded Show. This episode is a bit different today. This is our first of a solo podcast series. So here, what I really want to detail is what that journey was like going from sales to raising capital and allocating capital full time. I think a lot of people who are listening to the show may fit in the bucket of you are a sales executive, you are an aspiring sales executive, you have kind of worked your way up in the sales leadership world, and you've done really well, right? You're someone who has seen success in the corporate world, and you like what you're doing, right? But you may not want to do it for the rest of your life. You may want to have the optionality to say, hey, this is great, but I don't want to have to do this, right? I think your mind and perception shifts a lot when you go from having to do something versus having the option of doing it. So really want to take a few minutes here and just detail what my journey was like going through the world of sales to the world of raising capital. So for me, when I first started in the sales world, I started super, super low, right? As low as you can go rank in totem pole of sales. I got out of college. I had no clue what I wanted to do with myself, right? And naturally, I figured, what's the lowest barrier to entry that I can go jump into career-wise that has the highest overall upside in terms of both education and compensation based on performance? And that quickly led me to sales. And it wasn't as intentional as it seems. So for me, I applied to a bunch of jobs on the job board. I got lucky that one company was hiring, and I got really lucky as to who my boss was at the time as well, right? So for me, when I first started, I was an SDR, sales development representative. And for those of you who aren't in the world of tech or software and don't know what that means, is your sole job is you're booking meetings for qualified sellers, right, with prospects that potentially can buy the software and tech in which you're selling. So that sounds exactly what it looks like, right? You are hitting the phones, you are sending a lot of emails, you're blowing people up on social media, right? You are getting told no as many times as humanly possible to hopefully get a yes to go pass off to that meeting to a more qualified seller. The really nice thing with that role was that it was a role in which you can really outwork your learning curve, right? So it wasn't a super high ticket sale. You're basically selling blocks of time. Your sole focus was, how can I get meetings with executives that fit the profile of which you want to sell to? So you can kind of outwork the learning curve in the sense that you may, not have a great day, but you can go put a lot of output in. So if you kind of think of it, it's a simple equation, right? What's your output versus what's your conversion, right? And it's a multiplication table with two decimals. So the higher one of them is, the higher the overall output can be. So at first, when you're first starting, you can really go outwork the learning curve that you have as you get better at converting people over and over again. So worked in that role for about a year, quickly moved to actually a similar role, a different company in a bigger space, right? Similar industry that we were in. A lot of us in that first company moved to the second company, and the team was bigger, right? And for me, I knew a few things, right? One, that if I can go spend as much time as humanly possible with the higher ups in the company, that if I can go work really hard and show that I can go produce, doors will open for you, right? It's very rarely a linear path when looking at, I go from this job to this job to this job, you keep making more and more money or take more responsibility. But very rarely does that happen. So in the second role, I was in a team of, say, 50 people, right? And consistently was that top one or two people every single month. And a month upon the job, that's really tough to go do, right? You have travel that you may do, you have personal stuff going on. And for me, it was, you push a lot of that to the back burner, right? In terms of what you want to go do. So in that period of time, I spent a ton of effort and time just seeing how can I be the best person humanly possible at what I'm doing and make as much money as I possibly can. I had no clue what I wanted to do yet, but I knew in the interim, well, let me go make as much money as I possibly can. So that way, when I figure out what I want to go do, I can go much bigger, much more quickly. So worked in that company for about a year, and you learn a ton, right? We were actually selling to salespeople, which was great, right? So for us, we got a huge look inside the mind of a salesperson from the buyer side of the house, where you have to really dive in and understand, how do they think? How do they operate? How do we get in front of these people? How do we earn their time? How do we think the way they do? So I think when you tie this back to raising capital, which will in the future as well, is that the better you can understand who it is that your investor profile is, your buyer profile is, the more you understand how they think and how they operate, typically the better off you'll be. You can relate to them more easily. You can understand what they're thinking, what they're going through, right? So for me, went deep as possible in understanding how do I understand how this person thinks, how they operate, and really getting inside their head. So worked in the company for about a month, or sorry, about a year. And in that period of time, actually started looking at, okay, what can I go start putting my money into? I had no clue about syndication, no clue about funds, no clue about raising capital. My thought in the real estate world was passive income, right? I was continually making more money. In the sales world, you're really lucky if you are in a good company where it's meritocracy, where you are paid based on performance and you have the upside based on the commission which you can go earn. So for me, your earnings can double the first few years that you're working. And mine followed that suit as well, where I was making more and more money and I was spending, roughly the same. My lifestyle maintained a very consistent type of approach to it in terms of spending each month, meaning that I had incremental capital each month, each quarter to go put into things. And I had no clue what I wanted to go do. I thought I understood passive income really well at that point. And my thought of passive income was I'll go find single family houses. I'll go put a long-term tenant in there. I'll get a property manager in place and I'll be good to go. I'll buy a few every year. And in 10 years, 15 years, I'll be good. Turns out that is in no way the case. So I think I was 2 or 3 houses in at this point where I was buying single family homes. The first one actually bought off a company called Roofstock, right? Direct to seller in terms of the approach through the marketplace. Great experience. Really just helped me see, how can I get in? How can I go bid on a property? How can we make this process as painless as possible? And, quickly, started buying more and more properties from that same seller. In that period of time, I actually moved companies where I was working for actually the same boss I had at my first company and building a team. And so I ended up leading a team of 100 plus people at a larger publicly traded company. And, I think a big thing that people miss is that to move up quickly in your corporate role, you need a few things, right? One is finding someone who will go take a bet on you. And this to me is actually one of the most crucial things that you can go do. And what I mean by that is that, say you're a 6 out of 10 in something, right? And you keep doing those things to make you a 6 out of 10. You're never challenged. You're likely going to go remain a 6 out of 10. But if you have something of the opportunity to go take things on that are out of your current skill set, out of your current comfortability zone, that's where you can really grow. So I got really lucky and I definitely worked for it as well. And part of this ties to when you have the opportunity to go leave an impression on someone that in the future can then really put their neck out for you, do it, right? So in this first job, I was living in my CEO's office. Turns out 2 years later, this CEO ended up hiring me again to go build this team. And it was the reason that, I would live in his office to the point where he would kick me out, right? I was trying to get every bit of knowledge I could from him. He was incredible at psychology, right? Understanding how and why people do things the way they do, how they operate, how they make decisions, how to find win-win scenarios. I think really often in the sales world, people, especially people who aren't in sales, think of sales as a I win, you lose type scenario. And for me, I got lucky in the sense that I had someone really show me the right way of sales, where it's how do you go create win-win scenarios where the outcome makes everyone in the situation better off. So that helped a ton in terms of learning the psychology behind it, how to go create win-win scenarios. But to tie it back together, the CEO actually ended up hiring me after my second company to go build a team for him, doing what I was doing already, right? But instead of doing the work myself, I was building the infrastructure and a team to do so. And it was a company in which they were a publicly traded company. It was a bigger company and they never had an SDR team. And when looking at the SDR team there was opportunity, right? It was basically the scenario where if you build it right, you can keep growing and you can grow globally. And for me, that was a really cool opportunity because it was all on you. A lot of startup companies, there are great opportunities there, but you grow with the company. For me, this was an opportunity where the company was already big enough and had enough scale and capital where it's, hey, prove it, show it works, and then go, right? Show these dollars being used in a proper way. Show these dollars are an investment, and you have all the opportunity that you can want to do so. So fast forward, that team started really growing quickly, started performing well, and I think I had 10 houses at the time. And what I realized was these houses were in no way passive. my thought of passive income was completely off. Yes, I had a property manager, right? Yes, I should have the systems in place to make it easier. And I did whatever I could to make my life easier, my life more scalable, so I can go focus on my day job. I think what people miss at times is that in sales, especially if you're in a high-end management role or you're in a high-end seller role, you can make 2 or 3 times what your on-track earnings says you can make, right? And you're in a great position. The more you produce, the more freedom you have to go do what you want to do outside that role. And the more cash you then have to go fund those things you're looking to go do. But the other side of it is that if you are not performing well, you will have a very, very tight leash, and you will also just have meaningfully less capital, right? I always think of sales as you're 1 quarter away from a 6-figure commission check, and you're 1 quarter away from being fired for performance. So it's always a delicate line to go walk. And I think the kind of aha moment I want to say I had 10 houses at the time, and a tenant of mine drunkenly drove over a sewer line with their tractor, right? They were mowing their lawn in a tractor for some reason. Couldn't tell you why, but I got a call from my property manager. And at the time we were having our quarterly meetings, right? We're going through to our senior leadership team, right? And our executive team. What was performance like? What are projections, right? Really crucial time of the year to go show the growth, show what's been on, show how their investment in your team and company has been worthwhile to them. And I think I got 15 calls that week from the property manager saying, approving different things, calling me for approvals, calling me to go keep me updated, right? Call me with issues. And I realized that this was not what I wanted to go do. The thought of having enough of these to go live life on my own terms, it was a lot. And the added pressure, added stress, added just lift needed, it wasn't the proper trade-off, right? The input of my time and effort was not worth the return that I could get on these properties in terms of that. So I sold them all off, right? I'm like, okay, I'm done, right? We fixed up the issues. I sold them all off, actually to Zillow at the time when they were still buying homes, and started clean. In that next 6 months, I spent a ton of time listening to every single podcast and free resource I can go find, right? And truly understanding what options that I have when looking at investing in real estate. I was all in on real estate. I just didn't have to be a better way of doing what it was I wanted to go do. So, after probably thousands of hours of podcasts, right? Like when everything I was doing was listening to podcasts, probably, walking the dogs, going to the gym, right? Every free second I had when I wasn't on a phone call for work, I was listening to a podcast or some level of educational content that I can go take in. And what I found was that the shift from investing passively while you're the operator to investing passively as a capital allocator or limited partner is entirely different. The ability to go invest as an LP, a limited partner, truly meaning that I am finding someone who has a deal, finding someone who has an operating team, and I'm writing them a check. And that changed my mind entirely. All I was doing here was then using those same skills that I use to interview people, right, when looking at the day job, to go interview and find different sponsors and operators, different asset classes and markets and types of deals and structures and asset classes. And I spent all my time then interviewing people. So the nice thing is that when I first started, it was all my own money, right? I think the first $1 million I invested over a course of 20 deals in about a 9-month period of time was all my own money. Meaning that the risk I had in these projects was I could lose, if I put in $1, I could lose $1. That was it. I had no liability beyond that. So big benefit there was that I was not liable for the debt, for finding projects, for ensuring their success, right? I gave up control to that operating partner, but in turn, I bought my time and peace of mind back. So for me, that was entirely worth it. It was also all money that I made over the last few years in terms of the single family houses I did, in terms of the corporate jobs I've had, the stock program I was involved in, right? So it was all money that was new money that was found to myself. Then I'm like, okay, I'm 24, 25 years old. I can go take big risks in doing so in terms of invest in this capital. And if it turns out great. If not, it's a very highly paid learning experience. Luckily, in that time, it was a great period of run up in the market where we could take a lot of advantage of the tailwinds when looking at the real estate market. But more importantly for me, it really gave me exposure to how to get involved in real estate, how to go really leverage the skills I had, and how to go really niche in what I wanted to go do. So what I found in those 20 deals was if you can find great operating partners, there's really 2 things that matter in a project that can't be hired out for, right? One is do you find, or like how do you get involved in a project in a way that you can actually get equity for it? One is you find deals, and two, you find capital. So for me, I'm like, okay, I invest heavily in these. I'm in 20 deals now, and I plan to keep doing it. I also, every person I spoke to, they would ask, who's involved in the corporate world, what are you investing in, right? How do you think about this? This seems very different than what I've done in the past. Most people think of real estate, they go out and buy a single family home, a small multifamily property, an Airbnb, right? But they do it themselves. And they may not have the time capacity to go be as hands-on as they want to. So this is a whole new way of thinking for me. And in turn, I would get very frequently asked, hey, if you ever do projects like this yourself, let me know. So fast forward a bit and really realize those two areas, right? Capital or deals. And for me, look at the deal side of it. I was working a director level plus role in the sales world. I had a really strong job, right? Where for me, I want to make sure I can focus very heavily on that job when I needed to. So finding deals, I think you have a little more variability there in the sense that if you pull back for a period of time, right? Say your day job is absolutely slammed for a window and you can't go follow up with sellers, you can't go interact with brokers properly, right? You lose that time. Those deals will have to go to someone else. The capital side of the house, right? I can go leverage those same sales skills I had, right? Basically be my own SDR, where I was, thinking of, okay, who can I go target that may be interested in projects like this with me? And what I really thought was, all these salespeople I've sold to for years or worked with for years, they make good money, right? They have very high stress jobs. They have very high volatility jobs. And for them, they want the ability of being involved, but in a more passive type function. So for me, then I went out and I'm like, okay, I'm going to go work with a few of these partners that I've already partnered with in the past with my own money. I've seen how they operate. I've seen the experience they give me as an investor, and I've really seen what it's like, right? So part of that, piece of actually investing my own capital was that I saw what it's like working with these people, right? What's the experience they give? What's the return profile they give? Because part of it is it's not just the return you hit, right? Part of it's the experience, how you make someone feel in that process of doing so. You communicate well. Are you ethical? Are you transparent? Do you really care? Do you really do what you say you're going to go do? How do you handle things when things go poorly? What people miss at times is that we have deals that performed way above how they should. And even in that process, things went wrong. And you want someone who can really help, who can stay calm, stay rational, isn't financially invested in the sense that this deal is their entire life, or they need this deal to go well to go live, right? But they're really involved in that project. So you saw a lot of what you liked and what you didn't like for an operator. So for me, I can go back and work with, instead of having 10 partners, 2, 3, 4 partners and build it out slowly over time with people I've already worked with. So I quickly, formed a few partnerships, broke into raising capital. And my first deal, I was partnering with an operator and so I worked with in the past. And I'm like, okay, I'll try and bring in $1 million to this deal. And what I didn't realize was that raising $1 million without an investor list is really tough to go do, right? There's no training on it. There is no resources for me to go do it. There's resources in terms of these people speaking, how they run projects, but very little in terms of how do you actually go out and build an investor list. So I'm like, okay, I've got a small window of time for this. Well, what do I go do? And I thought, okay, let's go be my own SDR, where I hit the phones, right? Called every person I knew, had a relationship with. And I'm like, hey, I know we spoke a while back on this. You mentioned you were interested a while back in terms of doing a deal. We have this project coming up. Are you interested in kind of taking a look at it? And it's really funny. Most people those people that if you're like, hey, beforehand, you would have banked on to come through, none of them do. The people that you would have taken money saying they have, taken the odds they would never invest with you are the ones who actually wrote you a check. So it's a really good experience actually going out and seeing who in your network is actually going to go support you and committed to do this as well. I didn't go the route of close friends and family, right? I think it's, I liked keeping that separation in the sense that if things go wrong, those relationships meant a lot to me in terms of personal relationships. So now I do have friends and family who invest. They've had to ask me to go kind of opt in for it. Where this first deal was hitting the phones, hitting LinkedIn, right? Being my own SDR, really building up this investor base. And, fast forward to now, I learned a lot of those systems and process by doing them myself, right? By extreme trial and error. And there are deals that I did that I would never do again because of deal structure, because of the operators, right? Because of things that I didn't have anyone to go ask at that time to really dig into, Is this worth it? What should I look out for? Should I do this? Right? The education piece and the community aspect was something I lacked severely. And, fast forward to now, right, where I've left my job, I am full time in the capital allocation space. And, I think we've done, about $75 million of capital that we've allocated in the last less than 3 years over a course of, say, 45 projects in a variety of asset classes. So now I have really built a business around how do we go find excellent operating partners in different asset classes that, different markets, different deal structures, right? So how can I go look at my own money in the sense that being diversified, being spread out, being allocating capital for different reasons, right? I've now built a group of partners that I work with over and over again programmatically, where my role really ties to the equity investor side of the house and bringing capital partners to those deals as well. So it's a big different swing when looking at that side of the business. And for me, when I was first starting, it was something I really wish I had a lot more help in doing. A lot of it was trial and error, which was, and likely will be, very expensive for me going forward. So it was something that I would have paid, quite a bit of money to go have someone to go ask these questions to, or have someone to go help support you that can be a third party looking in terms of how do I go get started? So to tie back together, I think when you look at going from the sales world to going to capital allocation, it's very hand in hand, right? Leveraging those sales skills that you have, leveraging the network you likely built, right? Also leveraging your own capital too. I think it's one of the risk adjusted, best places to allocate capital still to this day. Never legal or financial advice, but I think it's a great place to go look at, how can we go get better returns on our own capital than if we weren't on the active side. So to me, that step from sales to allocating capital is huge, right? I think a big thing, we actually test this at a previous company when looking at enterprise sellers. One of the big things we test for is how comfortable are they talking about money? If you are selling big deals, right? Think, $500,000, million, multi-million dollar deals, a really important thing to nail is how comfortable are you speaking to your prospect about how much things cost and the investment it'll take to go do it. And when looking at networking with investors, bringing on people to your investor list, bring people into projects, one of those things you get really comfortable with or have to be is talk about money, talk about their finances, talk about how their view on money is, right? So people in sales already have those skill sets. You know how to go out and hunt. You know how to go leverage your network. You know how to go ask for referrals. You know how to go have really difficult conversations when things are going poorly. You know how to be really transparent when you need to. You know how to really ask for capital and not think twice about it, right? And view what you're doing as this intention here is actually go create a win-win scenario to go help someone. So to me, when looking at these different fields, right, the field of capital allocation and the field of sales are so closely aligned that it was a great step for me. And I think a lot of people listening to this are in the same position to myself a few years back, right? Where they want to go have access to the freedom, access to go do what they want. I think a lot of it, your perception shifts when you have the optionality, right? Be able to go leave your role, be able to go leave a boss that isn't serving you anymore, right? I know there are times as well in companies that you feel as though things aren't ethical or things aren't going how they should or not being treated fairly. That optionality through passive income and side businesses gives yourself the optionality to go leave a situation that doesn't serve any longer. So I think that's a big thing too, is that not saying everyone should go quit their job tomorrow and start raising capital, right? Not at all. For me, I left my job, right? I left the VP of sales role when I had, I think, 2 years of runway in cash. I had enough passive income to go cover all of my main living expenses. And I had a business that was producing income from day one that I could go bank on going forward, right? So I think people at times look at this from two different sides, right? Saying, one camp is, burn the bridges, go all in. The other camp is wait till you have something stable that you can go leave and make sure you never go back. For me, when I left, I waited probably longer than most people would. And, I had friends in the industry that were, you should have left 6 months ago. And I have friends in the corporate world that are saying, you're nuts for leaving. So I think a big part of it for me was you have to do whatever you feel comfortable with, right? If you go force that decision, you'll likely regret it either way. And it's something you have to be really confident in what you're doing. For me, how I knew I was ready to go leave was that I had the cash handy, right? Runway. I had more cash flow than my burn each month. And I had a business that was producing income today. And I also had the skill set that I knew, hey, if I go to zero, for whatever reason, I can get it back, right? Through raising capital, through capital allocation, if I had to, going back to the sales world. And just for me, I knew something that, that would crush me if I did number 3. Like, I could not leave and have to go back. That just would have totally crushed me personally to, ego, pride, just it would have felt like soul sucking work, right? Having that freedom for a period of time and having to go back. So I knew that I would rather wait the extra 6 months, right? So that when I left, I was in a position where I was good. I may have to cut back at certain points, may have to go spend less or burn less capital, but I would never have to go back to a corporate role unless I wanted to do so. And not saying you should never go back to a corporate role or you should leave corporate, but the option of staying or going or doing things you care about more so. And a lot of people maybe listen to this maybe in the tech world where those big roles at new companies may be lower cash comp. They may be higher equity plays for you, where if you have that passive income coming in, or if you have a side business producing income, you have the ability of saying, okay, I'm going to go take a pay cut now for a longer term play. Or I believe in this company so much that I'm willing to go take a pay cut for a period of time in hopes for a bigger exit. Or it's something I really just care about. It's a really meaningful cause to me. So you give yourself those options when you have passive income, you have a side business to go do so. So to stop rambling here and kind of tie it all together, I think just the journey of going from when you're starting out in your career, I think sales is one of the single best things you can go learn how to go do. Whether you end up raising capital, whether you end up running your own company, whether you're starting something else, having the ability to go sell and understanding how people operate, how they think, right? The psychology behind how people invest is something you'll be really happy you have, right? Everything ties to sales. Sales is the lifeline of any company. You have no revenue coming in, no one's getting paid, right? You're one of the providers for the entire company when looking at how people get compensated. So that's a huge skill that'll help you in other areas of life as well. And the optionality piece of it, right? Of being able to go walk away from something that doesn't serve anymore is so hugely valuable. Additionally, just that finding a flywheel for yourself, right? If you can go sell, go leverage those sales skills, do something that has higher upside, right? So, to kind of tie this together again, if you are in sales, looking to go break into the field of capital raising, looking to go break into the field of passive income through real estate, through investing, definitely feel free to reach out to us. We're always happy to help have those conversations. Something I, a passion of mine now is really helping people make that transition from active sales income to either retired via passive income, work optional, or looking at how can I go get involved when looking at raising capital. So again, all this ties together in a really cool way. I'm really glad I did it in terms of making that transition. And happy to answer any questions you'll have in the comments. Throw them in the comments below. Reach out to us directly. But again, thanks for tuning in. This will be one of the first of many solo podcasts that we do on given topics here as well. All right, so I wanted to answer some questions. I threw up a LinkedIn post, a Facebook post as well in terms of what questions people have, kind of thinking of the transition from sales to raising capital. So can you share specific strategies and techniques from your sales background that you found effective when transitioning to raising capital? So I think one is just the understanding of how people think and how they operate, right? So think of buyer personas, right? So how well you understand who it is you're looking to go raise capital from, the better off that you'll be. Second is the skill of hunting, right? Leveraging technology, leveraging tools like LinkedIn to go find, profile, and target and build systems and process around people you want to go connect with that you feel as though are quality Mr. Avatars to yourself, and figuring out that talk track, that commonality, right, that you can go connect them with. So I think it's the buyer profiling, right? So investor profiling here. I think it's the ability to go hunt and run a process and follow a piece of that as well. And I think the piece of asking for capital, right? I think those are huge things when looking at kind of breaking into the space. Next, we have, was it worth it in the end? Yeah. So 100%. For me, that was one of the biggest life-changing things that I've done in terms of what my life looks like now. In the corporate world, there were a lot of things I did like, right? I had really good people around me. I always had great teams. I worked for the same boss three different times over a 6-year period who, one of the most influential people in my entire life so far. And I had a great time there. But I think the biggest thing that I have now is I have both time freedom, location freedom, financial freedom, and you have that optionality of what you want to go do, where you want to go do it, who you want to go do it with, that you're not offered that in the corporate world, right? You can go build your own schedule. You can do your things first. I think a big thing that I think about right now is that, my schedule, I live off my calendar. And one of those things that I do is that every week I have 6 things blocked off, right? Where I have the gym Monday through Friday, once a week, gym or basketball. I have never missed one of those. And a weekly massage that I go do, right? Like those things are non-negotiables. And for people, they may have different things that are non-negotiables for them, right? So for me, those are non-negotiable on my calendar, meaning you cannot book those things over. So the ability of doing things for yourself first and having everything else fill in behind that is so crucially valuable to me when looking at my life today. So yes, the money piece of it can be great, but I think more so the time freedom and the location freedom are actually bigger in the scheme of things than actually the money allows you in that sense as well. So also, how do you go leverage, small, medium investor looking to go buy more property with other people's money? Again, not legal, not financial advice, but if you're buying kind of smaller properties, whether it be single family or small multifamily, doing joint ventures with a friend, a few friends, right, that you can go pull into the deal and taking a level of management spread for actually operating the project, right? You may, structure it in a way where they bring the capital and you split the profits, or they bring the capital and you take a certain profit share, or they get paid first and you have the profit share therefore after, right? Tons of ways you can go structure it. But where I think of that is that you can bring someone in who's the capital partner, and then if you're one actually doing the work, you can kind of figure out a split that makes sense between you and that person or people in doing so. Next, we have what are the 3 most important questions to ask potential investors. I think one is understanding how do they think about money, right? Like what does it look like to them? And I can give an example here, right? This is a generic example, but say someone has come from old money, right? And for them, they've never experienced what it's like to not have anything. So for them, they may really care about the upside in a project, right? How good can this go be? Show me how this can be great. So the other side of that is someone who maybe they came here into the US as an immigrant and they came with nothing. And for them, they may really, they came with nothing and they've now made, some money. They're now in a great position where they're really concerned with how do I not lose capital, right? How is this deal protected? So it's understanding how to go position what you're doing to be the best that you can go position something to them. Really thinking about, what their timeline is, what their goals are, what their liquidity is, right? A big thing that we see in the type of deals that we do is a lot of these deals are illiquid, right? And you may not have your capital back for 3, 5, 10 years. So helping people understand what's your timeline. Do you understand that this capital is actually liquid in this deal? And is this what you're looking for, right? So I think that's really a piece of it as well. Another one here is what's one thing you would have done differently? I think for me, I would have invested more in education if I could have, right? I think a big reason as to why we actually created Fully Funded was to help people, help my former self. Or a lot of people end up building these products or offerings that they wish they had at a certain time. So for me, the reason we created Fully Funded was to really go help people looking to go break into capital raising or get better at capital raising and really help them understand this is what goes into it, this is what to expect. These are people around you can go use for resources that are really crucial in that sense as well. So I think for me, I would have done a lot of things the same way, but I just wish I had more education to go avoid certain decisions I made in that process as well. But I think all of it's part of the learning curve. And that was a huge piece of it for me, was really ensuring that I now have the education and resource and community around me that I can go ask people when I have these questions going forward. Okay, so what are the key differences and similarities between selling products and services and raising capital? So I think a big difference is that, when you're selling a product or service, at least in kind of my background, it was a B2B type offering, right? I was in the B2B tech world where you were selling something to go solve a business problem. Here, you're really positioning something that'll help someone go create optionality, freedom in what their life looks like. I think a lot of the similarities play as well, right? You're running a sales process. You are really targeting people that make sense to go target, right? So how dialed in you are on your investor avatar is huge. Same with your buyers, where if you're not targeting the right people, no matter how good of a salesperson you are, if they're unqualified or not the right fit for what you're doing, it's not going to be a good fit even if they do buy or even if they do invest. So understanding that side of it is really important too. Common challenges faced by sales professionals and what to overcome. I think when looking at the transition from sales to raising capital, there's that phase where you still have your day job, right? And it's making sure that you're positioning yourself in a way inside your company, right? Have that conversation with your boss or do it privately. And it's that balancing act of making sure that your company doesn't feel as though you're putting them, second fiddle when looking at your hierarchy of priorities, but also still making sure that you're owning your personal brand or taking advantage of the time and opportunities you have, and that you are still kind of carving something out for yourself in a period of time too, but always kind of find that balancing act when looking at, is this worth it for me to go do this if I put something else at risk, right? So always weigh those options as well as you kind of start going into it. And I think when looking at the final question we have here as well is, how do you go vet a mastermind or a community and see if it's right for you? So to me, I went to high school, went to college, and I had two types of teachers in college. I had teachers that couldn't do, so they taught, and I had teachers that went and did and came back because they really valued the educational piece to students. And when looking at a mastermind, you want the latter. You want people who have done and still do what it is they're teaching you or helping you learn how to go do. So if you're looking at a capital raising mastermind to go learn how to get better or start raising capital, you want to go be in a community in which someone is actually still raising capital, who is the person leading that group. The person who's giving educational content and sharing that, you want them to be able to still go do the work. I think of this like when I was on the sales floor and, I led sales teams. And if you couldn't go be that top person in your team, or at least for flashes of time, be that top person still, your team wouldn't respect you. I think it's the same thing in a mastermind community, is that you want people who are paying you for your time, your experience, right, your guidance, to really believe that you're someone who can go help them do what they want to go do, because you can still go do it yourself. So I think, looking at, references, you want to see their work still, you want to see them actually still doing deals. I think in the real estate space, people who make their money versus on the deals versus the education side of it, yes, they should pay the education side. The deals should be kind of their top priority still. But yeah, you want to be with people who are still getting stuff done and not transitioning to someone who can't do as they teach, right? You want someone who is still doing and still active and still really looking, showing you what's going on in today's market. I think today, for example, we're seeing a far different market than we saw 2 years ago or a year ago or 3 years ago, right? So someone who's still doing the work can actually offer you insights as to what that looks like in today's market versus yesterday's. So thanks again for tuning in. I think this is great in terms of getting questions to go answer for you live here as well. We'll talk to you soon.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.